What's up, everybody? I just wanted to make this video really quick, going over kind of my thoughts on today's trading day and kind of showing you just kind of ways to look at the 5-minute chart on NQ. So let's just jump over to the screen. And I'm just going to be looking at this chart right here. So this is 5-minute with smart money concepts. And there are dots here, but it's something that I'm just testing out. As you can see, one thing that I wanted to point out from today is that we have formed a really nice kind of like support level overnight, 3 a.m. during London. We just started becoming very bullish, right? All day long, or all night long, I guess I should say. If you draw a trend line, which is something that I like to do when we have bullish activity, from the bottom wick to whatever is like the low of like 8 a.m. So that's going to be that wick right there, right? Like that. So I'm going off this wick that happened at 8:15. So this is like pre-market, right? Technically you could go off of this wick here at 9:05, but I went ahead and drew this in this range. Once we had this like push up, I went ahead and established this trend line. And what I wanted to see was where I think that we're going for the rest of the day. There's a good chance that we're going to continue up. There's also a very good chance, and this is something that I've pointed out in other previous videos, is that there's a good chance that off market open, if we dip, that we're going to dip into the 8 a.m. candle range. So if we go zoom in here, this is the 8 a.m. 5-minute candle, right? If I click on the top of this and I click on the bottom of that one, and let's make sure, so it's top and bottom. If I drag that out, wow, that's crazy. Did we not just come down, wick into the 8 a.m. candle and then bounce off of it? It's not like that hasn't happened before. That's happened multiple times this year. I keep on pointing this out, that this 8 a.m. candle gets wicked and then rejected off of a lot. And it's something that I've started to take note of, and you should too. There's a couple different ways of trading this too, right? So one of the ways of trading this 8 a.m. wick would be, you put your entry at the top of the wick, right? And you can put your stop right underneath the 7 a.m. lows for like 23 points. And on a big move like this is where it's like we've overnight, we've moved, how many points did we move? We moved over 100 points overnight during London. Let's see. We moved 200 points. Like this is a strong move to the upside, right? So there's a good chance that you should be able to target about 100 points relatively easy off this move here. So that would be a 4-to-1 risk to reward, right? There's other ways of doing that. You could wait for confirmation, probably getting a little bit more that we rejected off of this zone, right? Bring your stop down to there. That's still like a 3-to-1. Technically, if you wanted to wait till the candle closed, right, and got in on that next 5-minute candle, technically what I would probably do then is probably bring my stops under this right here, under these recent swing lows. So that's a 20. So that's still like a 5-to-1, right? So there's different ways of trading this this area here. It just depends on what your risk tolerance is, how long you want to wait for confirmation. The problem with this type of wick, right? The problem with this type of trading when you're waiting for it to wick, this wick could be just a few seconds. It could literally just touch this and boom, come right back up. So it's just a level that you kind of have to keep note of. So I like to take it early with very little confirmation. I personally have found, again, in strong moves where if we move 200 points to the upside during London, there's a good chance we're going to continue, right? So, if we're doing like that, we're talking like, 20 point loss for, potential 100-point gain. I'm taking that trade over and over and over again, and I might lose sometimes. It's okay. So, the other thing is, like you can see, we've respected this trend line. I would be looking for trades. Where would I be looking for trades? I would only be taking longs. If I wanted to keep a high win rate or take the highest probability trades I could, I would only be taking longs. on a day like today. Like there's no point in shorting unless you're really confident in your short. So I'll go over that in a second, but like I'm looking for, you know, 910. I'm looking for trade off of this zone long. I'm looking for trade off of this zone long, and I'm looking for a trade potentially off of this one long, potentially there. I might not have caught that, but right here, potentially long. We have hit this order block here. This is the first real short of the day, and this is kind of this big order block, this big mess from Monday right near close. We formed this level where we just had this massive drop. This is like that first level where it's like I would potentially be looking for a short. There are some other places where I'd be looking for a short, probably top of this zone right here. I'd be looking at a short, so top of this zone right here. And I probably would be ignoring any order blocks in this zone because this is like just all crap. Like this is all really, really choppy. So I would not be going off any orders blocks from this zone. A lot of order block, I don't know, algos, or not algos, but things that make order blocks would consider like this candle here an order block. But again, this is too much chop to say that that little wick right here or this candle right here is an order block before this move to the downside. We do have a little bit, if you do map that candle out, like you can see, we do have a little bit of rejection here, but it's just not that strong. I would be ignoring that. I would actually potentially be looking at this order block right here as a potential short, which is this candle right here. And if I went ahead and mapped that candle out, let's just do the rectangle. So if I map this candle out, just the body of the candle, I drew that over. Yeah, so that's kind of in this rejection range. If I map the top, I would be looking at the top of this one, the wick of this one, because of the previous ones that we had. But you can see that we do have like a little rejection off of it right here, right? But it comes down, hits the trend line, and then pushes through it. And what else would I be looking for? Probably none of that. The next major level that I'm looking at is yeah, I wouldn't consider any of the strong order block zones here. So the next level I'd be looking at would be like right before this big move here. I'd be looking at this. So yeah, so this level and then this level up here where we have these order blocks already marked out. So this is kind of the only times I'd be shorting would be potentially off of this zone, potentially off of this zone here, right? And potentially off of this zone right here where we literally just went through. So this is kind of like how I'm able to keep high win rates a lot of times is that I'm not taking too many trades. I'm looking for high probability setups. I'm looking for like, are we in a uptrend or are we in a downtrend, right? And I like to trade with the trend. If I'm trying to keep high win rates, right? If I'm just trying to scalp really quick, sometimes I'll take more shorts than most people, right? But that's because I want to say I have a fair amount of experience trying to short while we're making all-time highs, right? There is a chance like I might have shorted this 5-minute candle right here when we started to make a quote unquote double top and we had a little bit of rejection. It probably would have been able to get out in that same candle though, right? I look for like really, really tight moves if I'm trying to short while we're continuing to push in an uptrend this strong. I ideally, you know, if somebody new to trading or someone who isn't great at trading, you want to only be taking long. So the main reason why when we're in an uptrend, right, even if you take a bad long, right? So let's just say you take not a great long, right? You're not waiting for it to come back to the trend line, right? Let's just say you see this being pushed up, right? Let's just say worst case scenario, you got in right here, right? You're like, oh, this is pushing higher. Let's just say this is a red. So you're looking at, I don't know, let's just say you counted this as like 3 nights or three candles in a row, right? And you get in on this candle and then it just drops, it would have dropped on you, whew, like, what was that, 30 points, 30-point drop, 40-point drop right there, right? That's a hard thing to swallow if you're over leveraged. If you're you know, and for too many contracts for your account size, yeah, you're not going to be able to hold through that. But would I hold through that? Potentially, because potentially I would even be willing to hold through a lot of times back to the trend line, right? And then if we continued coming up, you know, which is likely, again, we're in this uptrend, we haven't broken to the downside yet. There is a very, very strong likelihood that we're going to continue to the upside, right? And you're going to be able to get out for profit. So again, that is not an ideal place for entry. First off, we're coming way off the trend line. This is also like where you have to look at moving averages, pay attention to moving averages, and stuff like that. But overall, this is kind of like my thought process and like how you would take high probability plays, right, off of something like this, right? So people ask kind of all the time, like how should I be scalping, right? Scalp with the trend. There's no reason to be scalping shorts here unless you think that unless your win rate is like over 80% and like you're really, really confident in your ability to short while we're in a uptrend like this, and just don't short. There's no reason to. I mean, really, I mean, I would highly suggest that you just be taking longs, right? And you want to just be really methodical with your longs. I mean, if I was looking at today and I wasn't trying to just scalp for really, really small points, I was trading on a 5-minute chart, like what we're looking at right now, I would have taken maybe 1, 2, 3, 4 trades so far in the trading day. If I was trying to be really methodical, if I wanted to try to capture more, I probably would have tried to take a short off of this right here, right? If I wanted to try to gain more profit, and potentially probably try to take a short again. Well, that's 6 a.m. so that doesn't count. So this is probably the only short I would have taken right there. I probably would not have shorted this. There's no indication to me that should be a level of being shorted, unless this is like a 1 hour wick. No, it's not. This is not a 1 hour. That is kind of where we closed, I guess. So potentially that one, but again, I probably wouldn't have traded this short either. I would probably have been just continuing trying to take longs. Anyways, that's it for this video. Make sure you guys like, subscribe to the channel if you haven't already, join the Discord community, and try out QuantVue for free, quantvue.io. It's literally a free 14-day trial. We've seen people even get payouts within those 14 days. Go check it out. Peace.